In this lesson, we're going to talk about Fibonacci retracements. Fibonacci retracements are a linear charting tool. They assist you in measuring the percentage of a move given back via a pullback. Now, as we all should know by now, stocks don't go straight up and they don't go straight down. What you will find to a very, very high degree of accuracy is how far they go down after going up, or how far they go up after going down, can be measured and used to determine how likely it will be for them to continue that directional move. Now, what I found in using Fibonacci retracements is I like to use the close of a candle for whatever time frame I'm using. And it doesn't matter if you use like the weekly chart as I've got pictured here, or even a 1-minute chart. I've always found that sticking to the close of a candle as opposed to a random wick that may appear on my chart has allowed me to trade using this tool with a much higher degree of accuracy. So I'm going to take on this chart here, and this just happens to be Apple. You may have heard me refer to it in the past as the ultimate Fibonacci trading chart. I say that because I believe it. But I'm going to zoom in here a bit, and I want to talk about the use of the Fibonacci retracement tool. There are different values that will appear as lines on your chart when using the Fibonacci retracement tool. Those values, in essence, will serve as support or resistance in accordance with the direction you may be trading to. Now, what I have found with the use of Fibonacci retracements is that it is not necessarily a single retracement, rather a series of retracements that assist you in dictating the likelihood of potential moves on your chart. I'm going to start here with Apple, and I went to a 10-year weekly and I just zoomed it in here to a spot. And I'm going to mark on an up move from the lowest close. That's the important thing. I said I go from the close of candles. I would go from the lowest close to the highest close. Now, as this move here may have just been starting out, you may have found yourself with Fibonacci retracements that look something like this. One thing to understand, at a time like right here, and furthermore here, when you break above that top line that you had set, that should be viewed as a resistance break, from which time you would either begin a new Fibonacci retracement from the last low point before the breakout, or for your overall low point on your visible move. Now, you can see here on Apple during this time from where I've got my tool actually set all the way up into here was a very clear up move. As a matter of fact, you never had more than one red candle until you got to this time. As you got a little bit of a pullback, you see actually this little wick here comes down and gives a little tap on that 38.2 before a positive move is made. This could be viewed by Fibonacci retracement traders as a positive move off of support, an opportunity to go long. For me in particular, I use it not necessarily for my entries, but for engaging with what I believe to be a longer term or overall direction on any chart. Let me show you what I mean by that. I'm going to use the same start point here. And you can see over the course of just visibly, it looks like a year and a half, maybe 2 years, we got to a high point here. Now, where this would come into play is also in reference to a little something called the 50% rule. It's a little trading rule used that basically states that any move that gives up more than half of that move is showing weakness in the move's direction. Well, let's think of that. That's an up move here that came and gave up on the close of candles more than half of the total move. Now, where I would use this to reference myself is not necessarily to say, oh, I have to go short right now. More so in an overall dictation on any target points that I might come up with using other trading systems to say that I am now expecting a lower high. The reason I would expect a lower high is because this indication told us we were showing weakness in the upwards direction, the direction of that move. Now, as I go forward here a little bit, you'll actually see that throughout the period of time, we had the lower high here and then began to fall. So an indication of weakness here in the upwards direction. Now, the other thing I do like is I do like to take chances on stocks, especially on a weekly chart, that make big excessive moves and drop 50%. For the simple reason of even if they're going to show weakness in the upwards direction, when they drop that much, they usually go up some. So it's a very, very, I guess you would say, simple trade to make, but one that the sheer signal of that 50% line gives you quite a bit of detail as to what expectations to have. As I scroll forward a bit on this chart, and I'm going to zoom out just a tad as well, you'll see right over here to my left is the time period I was referencing just a moment ago. As that fell and you began to get a little bit of consolidation, you'll see times by which, again, if I ran the Fibonacci's, here we get a dip, bounces off a support. Any line below your price is support. Any line above your price is resistance. That's one thing I talk about consistently, regardless of what trading system you're using. If you're going to put it on your chart, you have to trade it as such. Any line above your current price is resistance. Any line below your current price is support. We always trade with the assumptions that support will hold and resistance will not be broken. Those assumptions are not based because of a likelihood that they will never happen. It is simply because of the quality of trades that are produced when those assumptions hold true, but also the extravagant quality of trades that are produced when those assumptions fail. So again, through this, if we were looking for a long on any reversal, bounces off of our supports would definitely be areas to enter the long. Again, though, where I like to use it is on the overall up move and to find stocks that are beaten up hard that don't give up more than 50% of the total up move. As we scroll forward in the time frame of this chart, you actually find something about Apple that was kind of ironic through its 2012 and into early and mid 2013 fall. It very securely held that 50% line. Now, as I mentioned earlier in this video, Stocks that do not give up more than half of their move are showing strength in that direction. Just like before where I showed the pullback had given up the 50% line, as this pullback holds the 50% line, we are left to assume there's strength in the upwards direction, which in turn actually tells us that that strength would be to break the prior high. Now, some people might say, with all this charting stuff, what about the fundamentals and this, that, and the other? What you might find if you do enough charting is those fundamentals just happen to change when the chart says they should. It's a little bit ironic. Now, again, using our chart here in our charting tools, the Fibonacci retracement, any line above our price will serve as resistance. Any line below our price will serve as support. As you see here with the bounce off of this 50% line first, it comes up, it hits the 38.2 line and begins to pull back. Short-term traders would use that as a sell signal. When you again go down to the 50% line and hold and make a positive move, shorter-term traders would use that as a buy signal. Here, where you break above the 38.2 line, this could be used as for shorter-term traders as a break above resistance, so a new opportunity to buy where the resistance now becomes the support because it is a line below your price. And for longer-term traders, this becomes a validation, meaning, hey, I kind of held it through this, and now it's doing this. I can trade according to my stop and move my stop up. I'm getting validation of an upwards move. And as time continues on, we see, hey, strength in the upwards direction. Now, another thing that I like to do personally is when you start to get this up move, if you go long on this up move, you also need to follow your Fibonacci retracements from the time you entered. You see here, Apple makes an up move, it pulls back. Where does it bounce off of? The 50% line. As another shorter term trade, Apple makes an up move, it pulls back, it fails the 50% line. Now look at the subsequent high, a lower high, but a lower high that again on a subsequent move retraces no more than the 50% line before moving up, thus showing strength in the upwards direction. Now I'm going to take this chart and I'm going to take it down just to now a 5-year chart. This area is the area we had referenced and we were just marking with our Fibonacci's. And now we can clearly see a large up move, one visible up move, and we can mark with our Fibonacci's and actually look for 50% retracements point. We actually had that the morning of August 24th. Just as I showed you back in here on if you went long on this opportunity, you would also want to again mark your Fibonacci points from your long trade. Now, the trick here though, and it might be a little bit confusing too, remember early on I said I go from the lowest close to the highest close. So as I take this Fibonacci out, my lowest close here on this particular chart would be here. When I make a mark to this highest close, you see that this down move held the 50% line. That's a positive thing. And then as I move to here, this down move did not hold the 50% line. Subsequently, the up move led to a lower high and a pullback. And now from this bounce area that we saw, a prior 50% line, if I were to mark the lowest close of a candle to the highest close of a candle, we actually find more validation that there is weakness in the upwards direction. from the failure of the 50% line of the overall move. You can also use this particular tool for charting the downside. You would go from the highest close to the lowest close. And as you can see currently on Apple, we have retraced to a value higher than the 50% line. Now that would tell us there could be weakness in the downwards direction. We actually saw that weakness in the downwards direction when we so rapidly popped back up after a hard down candle. As time continues to progress for the chart, we want to continue to follow our support and resistance points as given to us by our Fibonacci retracements to assist us in trading overall direction. Now, when I get a chart that, like Apple here, has a long-term Fibonacci retracement, I like to leave this particular long-term retracement on the chart, even though I might have shorter-term retracements overlaying it as well. The reason I do this is I personally believe that these longer-term retracements will serve as a greater support or resistance than a shorter-term period that is being measured. A very, very simple execution and application of Fibonacci retracements.